I'm Marella Fernandez. Thank you for joining us for Market Call. Kim Bolton, our guest on the show today. He's president portfolio manager at Black Swan Dexteritas. He'll take your questions on technology stocks. Here's how to reach us: 1-855-326-6266. If you want to send an email question, send it to marketcall@bnnbloomberg.ca. Good to see you. Thanks for coming in.
Thanks, Marella. Good to see you again.
Let's talk about tech stocks. Took a bit of a beating yesterday, Palantir in particular. Are AI stocks overvalued? How do you see it?
Maybe in the short term, but you just have to digest. You look at some of these stocks, since April, they're up 60, 70, 80%. So, at best, I think we sort of consolidate in the short term here. Short term is like weeks, not months, before we can get another leg higher, because the long-term trend is still playing out with this whole AI revolution.
So you think there's still strength there and that strength will carry on?
Absolutely. I think there's going to be a rotation within the market. It's for the past, 3 years, right? It was November of 2022 that Satya Nadella talked about the whole open AI. So we've spent 3 years of getting the picks and shovels and the infrastructure in place. We think going into 2026, it's going to be the year of the end users, of how they're actually going to integrate the whole AI infrastructure to make them more efficient and effective in whatever business they're involved in.
And you think that 2026 will be that year of adaptation?
Well, it started with some of the big guys.
The banks.
Well, the banks, Boeing, Amazon, and you can sort of tell where it's happening because it's usually related to layoffs, unfortunately. So, but I think it'll start in 2026 of more being a mainstream.
Okay. Because we are seeing some of the stocks fall back, Nvidia sort of reached a high and then started falling back more recently in the last day or so. Should investors look at trimming at this point?
After yesterday, it was probably a good short-term
to buy,
sure. Right. But there's a lot of options around a lot of these big tech names, especially for selling puts and calls. And so therefore, with all of these laddered either side of the sort of the spot price of these individual stocks, the volatility gets very exaggerated because people have to, hedge up their delta on the single stocks.
Okay. Let's take a quick break. We will line up the first of the phone calls for Kim Bolton. And here again is the number to reach us. Kim will take your questions on technology stocks. We're back in just a moment. Stay tuned. Welcome back to Market Call. Let's start with an email from Danny, who says, I would like Mr. Bolton's opinion on BlackBerry. BlackBerry, of course, not the company. Used to be so many years ago. They essentially do, is it software now that they kind of do, or it's embedded software?
Software, very much sort of geared towards sort of the automotive industry and so on. Yeah.
Okay, very specific.
But they've done extremely well. Holy smokes, when you look at the QNX software that they have, they have that QNX embedded in 255 million vehicles around the world. And it's mainly geared toward infotainment in the cars, in the vehicles, but also in the autonomous driving platforms that are out there.
So there's room for growth for them there.
There is. It's still it's a $3 billion company. It's trading just around 670 now. The average analyst has a price target of 12-month price target of $8.60. So we don't own it, but if you own it, I'd stick with it. Maybe add to it if it comes down to around 640, and then I don't think it'll go under $6, but maybe get a final third down around 6.
Okay, good to know. Let's go to Mike on the line in Windsor with his question. Hi, Mike.
Hi. I was wondering, what are you thinking of buying Nvidia at these prices today for a long-term hold? Thank you.
Okay, thank you for the question. Let's have a look at Nvidia. It was down yesterday with Palantir and some of the other tech stocks. It is at 201 today. I think it had reached a high earlier in the week around 207. Yeah, well, end of October. 10/29, it was 207.04. So it's at 201, almost 202. Would you buy in right now at this level for Nvidia?
If you don't own it, I'd buy it here.
You'd still buy it here?
Yeah.
Okay.
It's one of our top 10 holdings. And pretty well in our funds, in our separately managed accounts, top 5, I'd say. It's just a must that you have to have in here. They're pretty well sold out all the way until 2027.
Okay.
They are getting some competition from the likes of course, Broadcom and AMD. But they're still the leaders. I think there will be a time, maybe later in 26, 27, when the growth rates will start to move down from sort of this 30% annual growth down closer to 20. But that's why I was saying before, the end users, I think, are going to be the big play going into 26, 27.
So you would buy at this point, you would hold it. Obviously, are there price targets that you have for NVIDIA that you sort of put some stock in? Do you think it's going to get up to sort of a 300 mark? What are you seeing for price targets on NVIDIA?
We always pay attention to the average price target of the analysts out there. It almost becomes a bit self-fulfilling because people will line up on those price targets. And so right now, the average analyst out there has a 12-month price target of 233.
Okay, 233.
But what we do, yes, we look at that 233, but there are certain places over the last year or two which were levels of resistance and now become levels of support. So trading right now around 201, there's very, very heavy support sort of around that 175 to 180, and then again down around a 140 to 145.
Okay.
So with a lot of the stocks, because valuations are stretched, yes, we pay attention to the price targets, but we also have sort of trailing stops. We don't put them into the platforms, but we sort of keep it in mind and get bells and whistles that'll go off at sort of those trailing stops so we can reevaluate.
Okay. Mike, I hope that is good for you on NVIDIA. Let's move on to another caller. Michelle is on the line. She's in Vancouver. Hi, Michelle.
Hi, Morella. Can I get Kim's opinion on ServiceNow? I heard the stock is going to split. Do you like the name, and is it a good time to buy now? Thank you. Okay,
so ServiceNow, I have a quick question because they do software management. And we've talked a lot about whether or not there is sort of a future for software considering AI. And the idea seems to be some of it will survive because it's embedded and companies won't want to switch.
Yep.
What do you think of ServiceNow?
We once again had this discussion on our morning call today. We probably within our portfolios have certainly less than 10, maybe less than 5% in software stocks. But it's difficult, right? Because a lot of the artificial intelligence, generative AI, is really sort of displacing a lot of
what software
the
does.
Magic that comes from these software companies. So I would look for places, Michelle, I would look for places to get out of it at this stage. You can see it on the chart. It's just sort of consolidating, which may say maybe there's another leg higher, but I think it's too early to actually look at it that way.
Okay. When a stock does split, is that a good thing for an investor? What do they gain from that?
It's certainly good for the retail because it allows retail to actually buy more of the stock. So it may give it some short-term fuel, but in the long term, it really doesn't matter.
Okay. We are going to take a quick break. We will line up more phone calls and emails for Kim Bolton of Black Swan Dexteritas. We're back in a moment. Welcome back. Thanks for joining us. We're going right to the phone lines. John's on the line in Victoria with his question today. Hi, John.
Hi, good morning. Thanks for taking my call. The question I have is on a company called Quantum Emotion. They're out of Montreal, relatively small company, I think, but their area is quantum security. And they're in something called, there's a market called a hot wallet, which is a little out of my depth, but I'd be really curious. Apparently there's a lot of room for growth there. I'd be curious to hear Kim's opinion on this. Thanks very much.
Thank you for the question, John. So I have that Quantum Emotion does marketing cryptographic solutions. Could you explain what that is?
As John was saying also, their main play in the quantum computing side is more on the security.
Okay.
And that's why John was talking about wallets for the cryptos, that their security, it's a really complicated company. And it's not that small. It used to be, but it's just shy of $1 billion in market cap right now at this sort of $3.66
is where I have it, yes.
Yeah. I actually had the fortunate pleasure of meeting the CEO, Francis Polito. Very smart guy, very linked in with the University of Sherbrooke that has helped them out an awful lot. And I would, John, if you're hell-bent to actually buy into QNC, I think you should probably do it in quarters, maybe buy a quarter here and because when you look on the charts, the volatility of it, but it's also gone up a heck of a lot. Heck, if you go back even a year ago, it was less than $1.
Yeah, and the run-up from sort of early October has been pretty big.
Yeah. But then what's the date? Today's Wednesday. Yesterday, I think it was off like 31%.
Yeah.
And then on Monday, it was off like 45%.
So it's a volatile stock.
Yeah. And there's a lot of moving pieces. A lot of the volatility, Morella and John, is actually coming from the commentaries where they're developing a lot of partnerships. So they become a size that they're getting the eye of a lot of people around the world. Now, last thing I'll say, John, we're involved, not heavily. I'd say in our portfolios, we probably have, either side of 5% of the portfolio in quantum computing. Our favorites are Ionic, D-Wave, and quantum computing. We know Quantum Emotion, but it's just a difficult, volatile stock to stick with.
Okay. Let's move on then from John to Bob, who's in Toronto. Hi, Bob.
Yeah, hi, Morella. I must tell you, I always enjoy it when you're the host of Market Call, so thank you. Tim, Microsoft is not up 50%. As a matter of fact, it's down 10% since it's high. So I'm just wondering what your thoughts are on it, and if it is a sell now, or we should buy more, or do you think it's going to go up? And do you hold it? Thank you.
Thank you. So Microsoft today at 508.86. It is down $5. Down over 1% today, but still up 24% on the year. Do you hold a Microsoft? Is it one of your holdings? You like it?
Absolutely. they were the ones that started this whole thing about, the AI revolution with OpenAI. So they are a leader. And with that comes a lot of eyeballs on it. The average analyst out there, Bob, has a 12-month price target of $633. So here we sit at 508. You've got over $100 on of a runway above here. So I would definitely stick with it. It just has so many horses in the race. The big horse, the main driver is Microsoft Azure, which is their cloud side and their data side. But they've got it all the way through cybersecurity, even in the software, and definitely in the AI application. So.
Okay, so it's one to stick with, if
Yep.
not, pick up a little bit more.
Yep.
Okay, let's move on to Kevin. Kevin's on the line in Markham, Ontario, with a question. Hi, Kevin.
Hi, can I have your guest view on Apple, please? Thank you.
Okay, very quick and to the point. Apple, of course, is getting the benefit of the launch of their new phone, the 17.
Mm-hmm.
Sales seem to be doing pretty well, and it only factored in a little bit for their latest earnings report. But what else is Apple doing that you like? They've been hit by concerns about AI and not implementing AI or embracing AI in their products fast enough.
And they've been able to kick down the road the whole new Siri until third quarter of 2026, which is only 8 or 9 months away.
8 or 9 months in AI, though, is
Yeah.
a whole new world. Okay.
It's funny, Morella, no one wanted to touch it when it was sort of sitting in that sort of 200 to 210 level. And it was all sort of dead money as everyone was talking about it. But then they came out with the 17, and then people realized that there was a long line of upgrades behind it, and this is what has stretched it up here. We think from this point, you'll end up having sort of a consolidation. So here we are, 270. The average analyst actually has a 12-month price target of 273.5,
Okay.
which is only
A couple of
$3.5.
dollars off, yes.
Yeah. And so, Kevin, I would recommend at this stage, because people are going to be lining up above 270, to sort of rebalance and take a little bit of profit. Kevin, I would be writing some short-dated calls here up at around sort of 275, using a strike of 275, 277.5.
Okay.
Maybe just do like 1 or 2 week calls.
Okay. Kevin, I hope that's good for you. Let's go to Chris. He's in Delta, BC, with a question. Hi, Chris.
Hi, Morella and Kim. Thank you so much for taking my call. Kim, I have a two-part question. The first, I'm calling on Honeywell, which you've recommended quite recently, and would just like to confirm and maybe get an update on that thesis if it's changed. And then my second question is, I read somewhere online that occasionally Black Swan Dexteritas permits much smaller investments rather than the usual sort of $500,000 minimum for the fund investments. And I'm wondering if that is an option with your company these days for the tech exposure. It's not my area of expertise, and hence my question. Thank you both. Have a great day.
Okay, thank you for the question.
Thanks, Chris. So Honeywell, yes, I think we recommended it back in the summer. We still love it. We have actually used yesterday as an opportunity to actually buy some more. And currently there's just shy of 200. And we have a the street has a 12-month price target. You can see right there, there's some tops just around that sort of 227 level. So there's still some decent runway left. Now, I can't remember, but it starts with an S, Solstice. They just spun off an industrial materials business unit.
Honeywell did?
Yeah, they did.
Okay.
It went IPO earlier this week. And it sort of struggled. We actually, everyone, all the Honeywell shareholders.
It is Solstice Advanced, yes.
But it sort of struggled. And we didn't buy it for the industrial material side. We actually bought it for the AI side of things. And so I would definitely hold on to it, but I wouldn't hold on to the Solstice.
Okay, good to know. We're going to take a quick break. We will have a look at Kim's past picks when we come back. Stay tuned. Welcome back to Market Call. Time to have a look at Kim's past picks. We will take a look at picks from November 20th of last year, so just under a year ago. At the time, Kim, you chose Arista Networks, which has split 4 for 1. At the time, it was $381.71. Now it's at $145.18 US, so 55% upside, 55% total return upside. Is this something you still hold at this point?
Absolutely. And it's interesting because look what happened last night. It's off, 8%.
Yes.
At one point last night, it was down 14%, which is a bit crazy considering they beat on the top line, beat on the bottom line. Growth rates were higher, margins were higher, but they weren't enough.
Investors have high expectations, he says, yes.
And so people used it, the smart money out there, were using it as an opportunity to sell because there was some liquidity on it. But, we're up 55%, and that's with an 8% haircut overnight. So we talked about actually buying some more, but we have a pretty full position in Arista right now. Their competition in the routers and the switches and the Ethernet are the likes of like a Cisco.
Okay.
So it's a bit of a bottleneck. There's 2 bottlenecks that are happening in the hyperscalers and the data centers. They're not having an issue in getting the chips and the GPUs. There is an issue on one hand of connectivity. And they say about 30-40% of the GPUs around the world are just sitting idle because they're waiting for Arista and Cisco to bring in their connections to connect all the GPUs and so on. So it's a fantastic space to be involved in. But as a result, it's a pretty crowded trade. We actually have a 12-month price target of $162.
Okay.
And actually, it was Goldman actually raised their target this morning, even though it's down, up to 175. And Morgan Stanley was up. Bank of America was up to 165.
Okay, and it's at about 145 today.
Yeah.
Got it. Okay, let's get to your next past pick, which was Snowflake. SNOW on the New York Stock Exchange at the time last year, November, was $129.12 US. It's up to 264.41, so 105% return, 105% total return as well. They do database architecture.
Yep.
What kind of architecture?
So in the stacks, there's a lot of structured data and unstructured data, and it has to be able to talk. The data has to be able to talk to each other to actually get a clear implication and an answer or a solution to whatever problem people are looking for. And so what they do, the company operates this cloud native platform that allows organizations to store, analyze, and share these large volumes of data with minimal latency and a relatively high degree of efficiency. So it's a big deal. Out of the Forbes Global 2000, 1,000 of those, half of them actually use Snowflake. They have over 10,000 enterprise customers around the world. That's why it's up so much, and they don't have that much competition in the space. Okay. So right now it's trading at 265, and we have a 12-month price target of 311.50. So there's still some runway left.
Okay. Let's get to your third pick from November 20th last year, Datadog on the NASDAQ, 135.45 US at the time. It's up to 157.14, so 16% return upside, total return of 16% as well. And they do software solutions. Is this a company that you worry about at all, considering the state of software?
Software solutions, not for consumers, but for enterprise.
Okay.
So once again, their software is embedded in the data centers and in the hyperscalers. And what Datadog's software does is it monitors all the moving parts in the data in the stacks in the data center. It actually gives recommendations if there is a fix required, and you can actually automate those fixes. And so right now, sitting at 155, we have a 12-month price target of 182.50. For like Arista and Snowflake will normally hold around 4.5% to 5%, but with Datadog, it's a little bit less. It's around 3 to 3.5% market weight in our portfolios.
Got it. Okay, we're going to take a quick break. We'll get back to your phone calls and your emailed questions when we come back. Welcome back. Let's go to Rob. He's on the line in Toronto with a question today for Kim. Hi, Rob.
Hi. Thank you for taking my call. I'd like Kim's perspective on Google. Do you hold it, and would you grab more? And also, how would you compare it to something like Palo Alto, which it might be a bit unrelated, but it also is floating around its 52-week high. So I'd just like your thoughts on that.
Okay.
Thank you.
Thanks for the question. Let's have a look at Google. Alphabet is the parent company, of course, sitting today at 284. So up over 2% on the day. A lot of runway for Alphabet as well, moving forward.
You would think so.
Uh-oh.
And it is in our top 5 holdings in the fund, and also in our separately managed accounts, which, I'm sorry, it reminds me, there is a previous caller, he was asking about limits of actually getting into our sort of Black Swan.
Yes.
So on the fund, just as a side, the minimum is 50,000, and on the separately managed accounts is 250,000. So now that we got that out of the way.
So let's get back to Alphabet, of course. Would you put money in at this level?
This is a really interesting one. And everyone's been talking about the overvaluation of a lot of these AI stocks. And this is a great example. But we still have it in our top 5 holdings, even though the average analyst out there has a 12-month price target of $264.75.
Interesting.
Yeah, it is interesting, right?
Why is that? Have they not updated price targets, or have they updated since Google sort of won its case in the US and kept Chrome? Why do you think that is?
Mainly because everything is running at 100 miles per hour in all the business units of Alphabet. Everything is singing. And so in this case, what we do, we still own it. We still expect it to go higher. We expect the analysts to actually raise their price targets. but we don't want to trade out of it. So we use these sort of trailing mental stops. We don't put the stops in the platform, but we'll keep an idea. So here we are sitting, around 280. The support should be down around this sort of 264, 75, 265. Okay. And so if it were to float through that level, which is support, then we'd probably lighten up a little bit because something is going on out there. But, they have, the third largest of the data hyperscalers out there. YouTube is doing great. The Google Play, the Chrome, the Android, Google Maps, everything is singing. And so that's why we stick with it. It makes us nervous because it doesn't happen that often, but it's just a fantastic company.
So you're keeping a watch on it, you like it, you're keeping it now, but you're keeping a close eye on it,
yeah.
say. Okay, let's get to Gary, who's on the line in Hamilton, Ontario. Hi, Gary.
Good afternoon. My question is on Adobe. Is it buy, hold, or sell at this price point? Is what does Kim think about the impact of AI on Adobe's revenue?
Okay,
Thank
Adobe's down at 333 is where I have it today. It has been sinking with the AI concerns, sort of whether or not this product is going to be viable in the future and whether subscriptions will tick up. What do you think of Adobe?
So Gary, we don't own it. It's an interesting stock because here it is sitting at 333. The average analyst has a 12-month price target of 456.
Interesting.
So that's $120 higher. So you'd think it was a buy. But everyone's talking about how, again, it's a software stock and maybe AI will be cannibalizing a lot of these software companies. But we do trade it. We actually do trade Adobe, and we actually trade it by selling short-dated puts and short-dated calls, even though it's negative. But you can see it, for the last almost a year, that it's sort of traded in a nice range. Volatility in the marketplace is keeping the volatility on the options side of Adobe relatively high. So that's how we actually use Adobe in our portfolios, just selling short-dated puts and calls either side, doing 1 or 2 week.
Okay, that is good to know. Let's take a quick break. We will line up our phone call for Kim Bolton, Black Swan Dexteritas, taking your questions on technology stocks in a moment. Stay tuned. Welcome back, and thanks for joining us. Let's go to the phone lines. Omar's on the line. He's in Ajax, Ontario, with his question. Hi, Omar.
Hi, how you doing? I got this suggestion from you around Synopsys. Just want to know if you still like it at this price. I know there was a decline. I just want to hear your opinion on it. Thank you.
Okay, thank you for the question. Synopsys at 414, down a little bit on the day and down over the year. They do design automation solutions. Do you like Synopsys?
Yeah, there are two players in this space, which is, Synopsys and Cadence. They provide electronic design automation software. Okay. Again, software, but it's more for the enterprise side. We did own it, and actually, Omar, it was it Monday or late last week, we actually sold out of it. Again, mainly because there is a concern that the whole AI is really affecting the whole coding community out there, because you can do it faster and quicker and more accurate
on AI.
on AI, which is great for companies like us. But I still have 4 coders at Black Swan, and we're constantly automating repetitious tasks that we have. And so Synopsys, they just closed on a big designer studio out of the UK. I forget the name of it. So Omar, even though the average analyst out there has a 12-month price target of $617.75, and here is it, that's $200 upside. It's just tough, and I think you got to let this whole software versus AI battle sort of play out.
Okay. Let's move on then to Simon. He's in Montreal with a question. Hi, Simon.
Yes, I would like to know about your opinion on Meta. Thank you.
Okay, thank you for the question. Meta, of course, going whole hog into AI, spending a lot of money this year and next. Do you think they will realize returns from their AI investment? That seems to be the big question.
Well, actually, they have. And everyone will say, well, what the heck happened last week when it traded down, over 10%? But what happened last week, I think it was a week ago today, they beat on the top, beat on the bottom, growth rates were great, margins were higher, they raised the guidance, and it's not as though the street was disappointed that the guidance wasn't higher. The problem was they announced a $15.6 billion tax bill.
That was a tax bill, yes. That's what hit them in the U.S.
Right. Now, I don't know. To me, that's a lot of money.
Yeah, it was a lot of money.
And I would have thought that they should have actually pre-announced,
that they were going to get hit by this. Yes.
Sometime during the quarter that this was going to come up. Right now, I think it was trading around 635.
637, yes.
637. We have a 12-month price target of 805. We've actually used this weakness, Simon, to actually buy back into it. Add to it, sorry.
Okay.
And so, it's sort of like Alphabet. They just have so many horses in the race, and they probably have one of the more robust machine learning capabilities out there, which is sort of interesting, right? Most of the machine learning companies, like an Amazon or an Alphabet, like they have data centers and they have clients.
Yes.
Right. Meta doesn't have the data centers, but they do sell the machine learning capabilities out to people. So it's just a different
business model.
Business model. So I'd own it here. If you get a chance to buy it down close to 600, and then about 575 for the final third.
Okay, let's get quickly to Don in Sarnia, Ontario. We've got about a minute and a half left under that. What's your question, Don?
Morales, thanks for taking the call. I really enjoy watching you on the show, and you and Kim have real chemistry. What I'm thinking about is Celestica. Does he own it? Does he follow it? Would he buy it at this price?
Okay, thank you for the question. Let's have a look at the Celestica chart. It's at 509, up 406% over 1 year. Wow. What do you do after a 400% uptake in Celestica? Where's it going?
Wow. I remember, a year ago, it was trading in the 80s.
Okay.
And
so very quickly, because we're running out of time for this block.
So 12-month price target on Celestica. Again, you'll chuckle about this, but the average analyst out there has a 12-month price target of $199.
Okay.
And here it's trading at 509.
So clearly they're behind.
They're behind, and if you own it, I would hold on to it, but I would use those trailing stops. The next big support down below here is right around that 450. If it goes through 450, then something's going on.
Okay. We're going to take a quick break. We will have new top picks from Kim when we come back. Join us tomorrow for Market Call. John Zechner on the show, chairman, founder of J. Zechner Associates. He'll take your questions on North American large caps. Time now for new top picks from Kim Bolton. We're going to start with Applied Materials, AMAT, on the NASDAQ. Also in the AI or semiconductor space. What do you like about Applied Materials?
So Applied Materials is like a hardware company. So it sort of falls into, its main competitors are like Lam Research and KLA. So they are manufacturing and selling those presses that TSMC and Samsung and Intel will buy to actually manufacture the chips.
Physically make the chips,
right.
Yes.
And so they also have sort of a software side to it. It's currently trading at $230, almost $240. It doesn't have that much of a runway. It's about $270 for a 12-month price target. So, I'd recommend, you could buy it here and then add to it, down around that sort of 225, and if you're lucky, down around 205. It's different from some of the others. Like it's different from like ASML, which is lithography, different from Lam Research, but a competitor to it. So, yeah.
Okay. Applied Materials, AMAT on the NASDAQ.
Yep.
Your next top pick is Panasonic. Panasonic is PCRHY, but we mentioned it's not trading on a North American market?
No. So the symbol, the PCRHY, is the ADR on the New York Stock Exchange. It's normally traded on the Tokyo Stock, the TSE. So I always sort of compare it to like Samsung. It's not in the same sort of business, but it sort of flies under the radar. So it's Japanese-based, which is quite the flavor these days to buy technology companies out of Japan. So they do a lot of appliances, B2B systems, industrial components. They're big into energy. They're one of the biggest suppliers of lithium batteries to Tesla.
Okay.
But then they have this division called. So they bought a company less than a couple of years ago called One Network Enterprise. It was for about $1 billion, and they put it into a business unit called Panasonic Connect, and the company is actually called. The sub-company is called Blue Yonder, and it's a supply chain software provider out there. So supply chain and logistics. So all the way from airline companies to energy companies to automotive companies that are sourcing parts from all over the world, and they have this software that will efficiently and effectively requisition all the parts and get it there at the right times. So it's a really interesting company. I wouldn't be surprised if it just sort of consolidates around in here. Okay. But I think a year from now we'll be talking about it and say that was
about
great
Panasonic. Okay, and then the next pick goes hand in hand with Panasonic, I guess, which is Tesla. Which is a very well-known stock name, and it is run up, of course, to a valuation. People worry about it, but do you like it moving forward?
I do, but Tesla is one of those names that people love to hate.
Sure.
But I think next year is going to be a very, very next year is going to be an important year, but actually tomorrow is going to be pretty darn important too, because that's when they do the vote for the $1 trillion package for Musk. But next year, it's going to be, it's going to still be about full driving systems and the autonomous vehicles and so on. But also, that's when they're going to start to mass produce the Optimus robotics and the humanoids out there. And they keep raising it from 30,000 to 40,000. Now they're saying it's going to be up to 50,000. So right now it's trading at 468, but that's mainly geared toward the EV side of things. And so the 12-month price target is 550. But I think what you'll find next year, once the autonomous robotics starts coming out, they're going to start raising the price target on this.
Got it. And that is all the time we have for Market Call today. Kim, thanks for coming in. Appreciate seeing you. And thank you for joining us today on Market Call. We'll see you back here again tomorrow.